The S&P and the NASDAQ hitting new highs after Jay Powell spoke on Capitol Hill. But I want to get a bit granular with you. Tech actually finished off of its highs of the day, and we saw two cyclicals. Materials and industrials actually finished lower. What does that tell you about the market reaction to this? And I also want to get your reaction.
Well, what we can expect from not only Powell's testimony today, but on the next quarter to come, is that this market rotation is going to continue. So big tech has led the market not only for the last 6 months, but the last year, quite frankly. So if we want to see the market broaden out, which we expect to see, big tech is going to have to sort of cool their jets right now. And then we're going to see a broadening out of other sectors to fill the gap moving forward, which is a welcoming aspect to the overall broadening market. That's what we need to see.
You're looking for some broadening, even though we saw two of those cyclicals close lower yesterday. I want to talk to you about cuts. Some people were very encouraged about what Jay Powell had to say about inflation. We saw the chances for a cut coming up in September have increased over the last month. Right now, they sit at 70%. Just a month ago, they were at 45%. Where do you stand when it comes to cuts? Do you think we're going to get one in September? And how important is a cut this year in particular to the rally, or is it just the fact that we're going to get a cut as the next move? Is that what you think is keeping this rally going?
What we heard from Jay Powell today was he lowered the landing gear. By that, I mean, he's setting us up for a September cut and maybe even the day after election cut. So we could probably see two cuts later this year, but definitely the balance cut or the balance conversation and the inflation is not the only risk comment that he made was significant today, which means he says that the balance in play between inflation is coming down, which we expect tomorrow on the CPI, as well as unemployment, which we see rising. He is keenly aware of those risks moving forward. I think that's the key moving forward for the Fed, but it provides cover for them to cut in September.
So interestingly enough, even as inflation is going down, you came to us with the CPI trade. So you gave us two picks outside of the CPI trade, Microsoft and Lilly. But the third one is Berkshire Hathaway. You're actually looking at the increases in insurance that we've seen over the last year. That's why you're bullish on Berkshire Hathaway. Kind of explain the thesis here for us.
So Warren Buffett last year doubled down on his insurance play. If you look at the Warren Buffett portfolio, it's a diversified portfolio, right? You got See's Candy to Coca-Cola. But in the meantime, you also have a good portion, 30%, which is insurance. And you and I both know kitchen table economics. Our insurance costs have gone up personally year over year. So that's going to feed into the earnings specifically for Berkshire Hathaway because it's 30% of their portfolio. So Berkshire Hathaway, we believe it's going to capitalize as a result of this. So if you don't own it, you should consider owning it long term. And we believe this quarter, after the second quarter reporting, is going to be really well for them.
Yeah, last CPI report showed that motor vehicle insurance increased 20% year over year. So do you just like Berkshire Hathaway, or is this, in your mind, is it smart to invest in insurance companies across the board?
Yeah, insurance companies, year over year, it's sort of a catch-up trade since COVID, because keep in mind, for the first 2 years of COVID, no one did anything. And then in 2022, everyone started moving. So insurance companies said, oh, gosh, everyone's moving now, so the insurance risk is astronomically higher, so we're going to price it higher. Well, that's not really fair. So, but they gave all of us 30% higher increase as a result. So that's going to feed into earnings on all the insurance companies. Warren Buffett's going to profit on it, as he always does.